Vegan. Waking up one morning and realizing the world's biggest economies are no longer moving forward, but circling the same problems again and again, like a plane stuck in the sky with no clear place to land. Growth slows, debt rises, confidence fades, markets swing wildly, and every solution seems to create a new problem. What if this isn't a temporary phase, but a loop the global economy can't escape? And what if that loop is quietly pushing investors, institutions, and everyday people toward assets that didn't even exist 15 years ago? Today, we're diving into a question more people are asking but few are answering honestly. Will the global economy get stuck in a doom loop? And what are crypto traders really saying about Bitcoin's outlook if that happens? Before we go deeper, take a second to like this video and subscribe to the channel. Because here on Finance and Global Economy, we break down complex global money trends in a way that actually makes sense for real life. If you care about where the world economy is heading and how it could affect your future, you'll want to stay connected. Now, let's talk about this idea of a doom loop, because it's not just a dramatic phrase. In simple terms, a doom loop happens when problems feed into each other instead of being solved. Governments borrow more to fix slow growth, but that extra debt makes future growth harder. Central banks raise interest rates to fight inflation, but higher rates slow businesses and strain consumers. When growth weakens, confidence drops, markets react, and suddenly policymakers feel forced to step in again. Each move is meant to stabilize the system, yet over time, these moves can trap the economy in a repeating cycle of stress. You can see signs of this all around the world. Many developed economies are dealing with aging populations, high public debt, and productivity growth that just isn't what it used to be. Emerging markets, on the other hand, face currency pressure, capital outflows, and rising costs of borrowing, often because global interest rates stay high for longer than expected. Add geopolitical tension, supply chain disruptions, and climate-related shocks, and the system starts to look fragile, even when headlines say things are under control. What makes this moment different from past crises is how interconnected everything has become. A banking issue in one country can ripple through markets in hours. A policy decision by a major central bank can move currencies, bonds, stocks, and crypto all at once. This constant feedback loop creates volatility, and volatility feeds fear. Fear changes behavior. Businesses delay investment. Consumers cut spending. Investors look for exits or hedges, and that behavior itself slows the economy further. This is where the conversation around Bitcoin and crypto really intensifies. For years, crypto was treated as a fringe experiment, then as a speculative gamble, and now, increasingly, as a potential alternative in a system people no longer fully trust. Among crypto traders, the talk isn't just about price anymore. It's about what Bitcoin represents. In a world where traditional financial tools feel stretched to their limits, many traders argue that if the global economy does fall deeper into a doom loop, governments will have fewer options left. Cutting rates too much risks, reigniting inflation. Raising rates to high risks breaking something important, like banks, housing markets, or government finances. Printing more money might stabilize things short-term, but it can weaken currencies and erode purchasing power over time. In that environment, an asset with a fixed supply and no central authority starts to look very different. That doesn't mean crypto traders believe Bitcoin is a magic solution or a straight line-up. In fact, most experienced traders will tell you Bitcoin is still extremely volatile and emotionally demanding to hold. Prices can swing hard on news, regulation rumors, or shifts in risk sentiment. But the long-term thesis many of them share is that repeated economic stress pushes more people to question fiat systems and explore alternatives, even if cautiously. Another key part of the Bitcoin outlook is trust, or more accurately, distrust. Trust in institutions, trust in long-term policy consistency, trust that today's solutions won't create tomorrow's crises. When that trust weakens, people look for systems that operate by rules rather than discretion. Bitcoin's rules are known in advance. No surprise supply increases. No emergency meetings to change the fundamentals. For some investors, that predictability is comforting in an unpredictable world. At the same time, crypto traders are realistic about the risks. Regulation is still evolving. Governments don't like losing control over money systems. If the global economy enters a prolonged slowdown or recession, risk assets can suffer, and crypto is often treated as a risk asset in the short term. That's why many traders talk about cycles, patience, and timing, rather than quick profits. They see Bitcoin not as a day-to-day safe haven, but as a long-term hedge against systemic instability. What's interesting is how this conversation has expanded beyond traders. Large institutions now discuss digital assets openly. Financial advisors, once dismissive, are at least asking questions. Even people who never considered crypto before are starting to wonder if holding a small portion makes sense. Not because they expect instant gains, but because they want options. If the global economy does get stuck in a doom loop, it likely won't feel like one dramatic collapse. It will feel like years of uncertainty, slow growth, policy debates, and sudden market shocks. In that kind of world, the question isn't just how much money you make, but how resilient your financial strategy is. That's why Bitcoin's outlook is so tied to global economic trends, not just charts and technical indicators. Still, it's important to stay grounded. No single asset can solve structural economic problems. Bitcoin won't fix government debt, demographic decline, or political gridlock. But it may offer an alternative system running alongside the traditional one. And history shows that parallel systems often gain traction during times of prolonged stress. As we move forward, watch how policymakers talk, not just what they do. Watch how often emergency measures become normal tools. Watch how markets react to bad news versus good news. And watch how narratives around money, value, and trust continue to shift. These signals matter more than any single price prediction. If you've stayed with me this far, it tells me you're thinking seriously about where the world economy might be headed. And that's exactly the kind of conversation we build here on finance and global economy. Before we wrap up, I'd love to hear your thoughts. Do you think the global economy is heading into a long-term doom loop, or do you believe the system will adapt and break free? And how do you see Bitcoin fitting into that future, if at all? Drop your opinion in the comments, because real discussion helps everyone see the bigger picture. If you found this video useful, share it with someone who's been wondering about the future of the economy or the role of crypto. And don't forget to stay subscribed for more deep, clear, and honest conversations about money and the global forces shaping our lives.